Welcome to Reverse Mortgage Radio, hosted by Legend's very own reverse mortgage professor, Bruce Simmons. You have so many options with a reverse mortgage, everyone has a different opinion, and the government keeps changing the rules. You need to hear from the first certified reverse mortgage professional in Colorado to specialize exclusively in reverse mortgages, one of few in the state with the letters CRMP after his name. Bruce has the specific training and education you need to understand what you're buying. Now, here's your host, Bruce Simmons.
Welcome to Reverse Mortgage Radio, the radio show where we unlock the facts, the real facts about reverse mortgages. I'm your host, Bruce Simmons. I've been specializing exclusively in reverse mortgage origination for the past 2+ decades, and I help older homeowners make the most of what often is the largest asset that they have, and that's their home, as you know. Today, I really want to talk about something that I think is really important. It's the top 5 questions to ask to know if a reverse mortgage is right for you. A lot of times I talk with people and they say, well, what do you think, Bruce? Should I get a reverse mortgage? And I say, I'm biased towards it. I think everybody should get a reverse mortgage, right? Well, okay, not everybody, but a lot of people should, a lot more than actually do. I plan to get a reverse mortgage. I tell everybody that. But these 5 questions are designed to help you make a thoughtful, informed decision about your financial future. Now, how you answer these questions may be the exact same way as someone else, and you might still come with a totally different conclusion. Maybe you think, this is great, I can't wait to get started, with all the same answers, and somebody else comes to the exact opposite conclusion. They say there's no way they're ever going to do a reverse mortgage. So it's all based on your thoughts, your feelings about whether or not you think this would be a benefit for you. So I recommend, like I said, grab a pen or just sit back and think through these things with me while we're talking about it. But before I get into the questions, I do want to tell you how to contact me. Again, my name is Bruce Simmons. I'm the reverse mortgage manager for American Liberty Mortgage in Denver. You can reach me directly at 303-467-7821. That's my direct line, 303-467-7821. You can also visit me online at reversemortgageradio.net. reversemortgageradio.net. And on there, you can download my free consumer guide. You can also fill out, answer a few questions and see how much money you could get from a reverse mortgage. It's great. There's video testimonials of customers. There's a lot of good information on my website. All right, let's jump into it though. The number one question, or the first question, I should say, not necessarily the number one, but do I plan to stay in my home for the foreseeable future, say 5 years or more? The thing is, a reverse mortgage is not a short-term fix. It's meant to improve your situation, to stay in your home or to buy the home that you really want for the long term, okay? Because the main reason is that just like all loans, there's upfront costs with a reverse mortgage. But with the closing costs with reverse mortgages, and I've done whole shows on closing costs, but really they're pretty standard compared to a conventional mortgage. Origination fees, appraisal, title insurance, all that stuff. But there's one fee that's with the FHA insured reverse mortgage that's different than most conventional loans, and that's the initial mortgage insurance premium. All FHA insured loans have an insurance premium on them. This is not your homeowner's insurance or anything. This is a mortgage insurance, which actually protects the lender. If you ever end up owing more on the house than it's worth, or if the lender goes out of business, let's say, the FHA will step in and cover the loss to the lender through mortgage insurance. So they're not going to come after you, your estate, or your heirs should the bank possibly lose money. They're not going to lose money because the mortgage insurance is going to pay for it. So you're never, ever, ever going to leave a debt beyond the value of the home to your estate. That comes at a cost, and that cost is the initial mortgage insurance premium, and that's 2% of the value of your home, not 2% of the loan amount, 2% of the value. If you've got a $500,000 home, that's a $10,000 fee. Now, if you're just going to get this loan and keep it for a year or two, that doesn't really make sense. You're not getting your money's worth. However, there are no prepayment penalties. So let's say something happens and you get a stroke and you cannot live in your home. You have to leave the home and go to assisted living. Your heirs will sell the house, pay off whatever is owed, but they're not going to get a refund of any of those initial upfront closing costs. There's no prepayment penalty, but there's no refund either. So that's why I just say you never know what's going to happen down the road. You might get hit by a bus three months after getting the reverse mortgage. I hope not, hopefully not, but it could happen. If you're planning, though, to stay in your home for the foreseeable future, a reverse mortgage is a great option for you. Okay? So that's the number one question. If you're thinking you're going to move a year or two down the road, you may want to look into a reverse for purchase, or just say, when I get into my new home, then I'll look into a reverse mortgage. All right. Number two, the second one, do I really understand how reverse mortgages work? You need the basics, okay? You don't need to get into all the minutia and all the principal limit and mandatory obligations and all these non-borrowing spouse rules or initial limits, initial draw limits, and all these kinds of things. You'll overwhelm yourself if you get in too deep, okay? But at least understand on the surface level. And now is actually a good time to explain what a reverse mortgage is. And then we're going to talk about some of the basic principles, all right? In a nutshell, a reverse mortgage, an FHA-insured reverse mortgage, is an FHA-insured loan that's specifically designed for people that are 62 and over. It allows you to convert a portion of the value of your home into money that you can spend, as long as you live in the home and pay your property taxes, your homeowners insurance, maintain the home, and keep your name on title. You never, ever, ever are required to make a monthly mortgage payment. You can, and there's certainly benefits to that, and we're going to talk about that in the last option. What happens, though, you can't forget this, is that you're still charged interest every month. You're going to be charged interest. If you choose not to pay that interest every month, your loan balance will get larger over time. That's why the mortgage insurance is in place, because most people do not make payments on these loans. It's growing. More and more people are doing it now as they learn the benefits. But what happens is you're charged interest, and so that loan balance goes up and up and up. But remember, you're keeping that mortgage payment in your pocket. You're using it for other purposes. So that's the cost and the benefit right there. You've got the benefit of keeping the money in your pocket. You're not obligated to pay it, but the cost is that it still gets added to your loan balance. You take out a $100,000 loan today, 10 years from now, you might owe $200,000 or whatever it works out to be, depending on interest rates and things of that nature. There's different ways you can receive the funds. There's really 4 different ways you can take money from a reverse mortgage. You could take it as a lump sum. Now, there's restrictions on how you can receive, how much money you can take in the first year. We'll talk about that if you fall into that situation. You can also receive a monthly payment where we make payments to you every single month. And there's actually a couple of different ways you can take those payments. But you can also, one real popular way is a line of credit. That way you just draw money whenever you need it. If your furnace breaks down and you need $10,000, you take it from your line of credit instead of putting it on a credit card and having to make payments on it. So that can really be a big relief for a lot of people. Most people, though, do some kind of a combination. You may take out a lump sum to pay off an existing mortgage on your home. And then you may say, well, I know even after getting rid of the mortgage, the principal and interest payment, because you're still responsible to pay your taxes and insurance, remember? But the principal and interest portion of the payment, you eliminate. So you no longer have to pay that payment. And maybe you think, well, I still need some money every month. We might be able to pay you an extra $500 or $1,000 or whatever it works out to be. There's a limited amount of money we can loan based on the value of your home and your age and the interest rate. So keep that in mind. We already talked about the obligations. You have to understand what your responsibility is once you get this loan. You have to continue to pay your property taxes, your homeowner's insurance. You have to live there as your primary residence, keep your name on title. Okay, you have to do those things and maintain the home. And remember that those are all required to keep the loan in place. Closing costs, like we talked about before. Understand the closing costs. And then also negative amortization, which is what we talked about before too, because the interest gets added to your loan balance. And as the loan balance grows over time, that's called negative amortization. So you're going to end up owing more money down the road than you do today if you choose not to pay that interest. And again, most people don't, because it doesn't make sense for a lot of people to do that. You're trying to free up cash. You have to make sure that's okay. You're okay, because every month you get a statement in the mail, and you're going to see that statement, and on that statement, the loan balance is going to get bigger and bigger and bigger. The benefits have to outweigh the negatives to you. If you look at that statement and it causes you stress, you probably shouldn't do the reverse mortgage. This loan is intended to relieve financial stress. All right, question number 3. What are you hoping the reverse mortgage will do for you? What are you hoping it's going to do? A lot of people look at a reverse mortgage like it's kind of a great, this is awesome. We can do all these great things, but really there should be something you got to focus on. I mean, we got to talk about goals, because a reverse mortgage, it's a tool. It's not a one size fits all solution for you. Okay. There's some common ways people use the loans. Some of the most common ways: paying off an existing mortgage or home equity line of credit to improve cash flow. Just imagine if you've got a $1,200 principal and interest mortgage payment, and we're able to pay that loan off. You no longer have that loan anymore. You have a reverse mortgage instead. Now you're able to keep $1,200 in your bank account. Every month, you're going to keep that money in your pocket. However, just remember that you're still charged interest, okay? A lot of people will set up that line of credit like we talked about. I love the line of credit option with a reverse mortgage. If we can loan you more money than it takes to pay off your existing loan or other needs, the rest of the money can be set aside in a line of credit that you can draw from over time. That line of credit can never be closed out unless you use it all, or if you don't pay your property taxes or insurance or maintain the home or live there as your primary residence. Other than that, that loan's guaranteed to be there. It doesn't matter what happens to the value of the home or anything of that nature. Okay, emergency funds. That's a great use. So many people, let's say we pay off a loan for you of $150,000 mortgage and we can loan you $200,000. That leaves you $50,000. A lot of people say, well, I'm just going to keep that and I hope I don't touch it. I just had lunch with a friend of mine who I did a reverse mortgage for. Well, actually, I got to know him because we did the reverse mortgage and he became a friend. Now we're meeting every month for lunch. And he he brings his statement every month that says, anything on here I need to be aware of that is not plainly obvious. And his line of credit, he had $25,000 in it, or excuse me, $20,000, I think roughly 4 years ago. And now he's up to $25,000 because the line of credit actually has a growth rate to it, and it can be tremendous. A number of people use the money to help out family, to help grandkids get a down payment for a new house for themselves. Other people will use it to improve their own home. You need to age in place, so you need to renovate your home. Or long-term care expenses. That's maybe you don't have a long-term care policy and you know you're going to need some, so you're saving that money in a line of credit to cover the long-term care cost. Or some people have been paying on a long-term care plan for 20 plus years, and now the premiums are crazy high. They're paying $300, $400, $500, $600, $700 a month, and they don't want to cancel it because otherwise they lose all that money, and they need money to help cover that cost. So there's probably 100 ways you can use the money from a reverse mortgage. You have to decide. You get to decide the ways that a reverse mortgage will help you and how it will improve your life. And I'm telling you, if the benefits do not outweigh the costs of a reverse mortgage in your own mind, don't do it. Don't do it. I would much rather have you tell me now, hey, look, I've looked at this and I don't think it's the best deal for me now. I'd rather have you tell me that now than 2 or 3 years down the road be upset with me because you think that I screwed you over with a lousy loan. Because this loan is not a lousy loan. It is a fantastic loan. It's a fantastic loan. And you just have to understand it. And if it's not right for you now, that doesn't mean it won't be right for you a year, 2, 3, 4, 5 down the road. And if I'm shooting with you straight now, you're probably going to come back to me and say, hey, Bruce, I think now might be another time to look at this. I think it might work for me now. And it may or may not. But I've had that happen countless times with people where they decided back in 2015 not to do a reverse mortgage. And now in 2025, they're looking at it. So keep that in mind. Okay, the fourth. Now, by the way, too, if you just tuned in, you are listening to Reverse Mortgage Radio. And my name is Bruce Simmons. You can reach me directly at 303-467-7821 or visit me online at reversemortgageradio.net. Reversemortgageradio.net is my website. You can go on there. And if you missed part of this podcast, you can it'll be up on my website next week. Usually around the middle of the week, my web guy gets it up there. And you can listen to the entire thing. You can go back and listen to the last 7 years I've been doing this show, or 8 years, I guess now, I've been doing this show. So keep all that in mind and check out my website. It's got a lot of good information. All right, we are talking about the 5 questions to ask before getting a reverse mortgage. And number 1 was, how long do you plan to stay in your home? Number 2, do you really understand how reverse mortgages work? Number 3, what are you hoping a reverse mortgage will do for you? Okay, that brings us to number 4. Number 4, can I actually afford to stay in my home even without a mortgage payment? Now, we do something called financial assessment, where we look at your credit and your income. We call it your willingness and capacity. If you pay your credit or pay all your bills on time and you've got great credit, you've got good willingness. Capacity is your ability to pay, your income. You know your income better than anybody. You know whether or not you can afford whatever it is you're looking to buy. Now, I may tell you, oh yeah, that's no problem qualifying you, but deep down you know it's going to be a real struggle to stay in the home, pay your property taxes, which are always going up along with your insurance, and maintain the home. So these are things that you have to ask yourself. You're really the only one that can answer it. I may tell you, hey, I can't qualify you on income because you don't make enough money. And you may say, hey, I do, but unfortunately in those situations, unless we can prove that you have it. And I run into this sometimes with people that are self-employed. Because, if you're self-employed, you deduct everything. And we can only add certain things back. Now, in that case, I know you probably have great cash flow and you can definitely afford to pay your taxes and insurance and utilities and still maintain the home and feed yourself and your spouse. But we have to be able to show it. It's called verifiable income. But the other thing, too, is you've got to ask yourself a few questions. As you age, how are you going to maintain the home? Do you have somebody that can cut the lawn for you? Or do you see yourself shoveling snow when you're 80 years old? Okay. Or what your plan is for major repairs. If all we are able to do is pay off your existing mortgage and you have no more money left over, no line of credit, no savings, and you're just living on Social Security. And you say, well, my Social Security is $2,700. My expenses are with taxes and insurance and utilities are only $1,200 or whatever a month. I've got plenty of money. Well, that may be true now. Next year or the year after, it may not. And if something big happens to your home, well, now suddenly you've got to get pay for it with a credit card. Now you've got a credit card payment, or your car breaks down and it can't be fixed and you've got to get a new car. Now you've got a car payment. So things like that just kind of mess you up. You've got to consider all those different options. So keep it in mind. Talk with family. If you have family that are involved, I know it's kind of tough sometimes to talk to your adult children about your finances. Talk to a financial advisor maybe. Or if you can, your kids. A lot of people tell me, my kids have nothing to do with my finances. Okay, that's it. Period. End of discussion. And if that's the way you feel, that's one way to look at it. I recommend talking with everybody, your family, if you can. All right. The last option, or the last question, I should say, what are the financial planning benefits and options of a reverse mortgage? And honestly, when I was planning this show out and I started looking at this, I got this last question from the book, Understanding Reverse. If you've ever listened to this show, you know this is like a Bible for me. I use this as a reference guide. It's a fantastic, short, easy to read book by Dan Hultquist, Hultquist. I highly recommend you get it. It's like $12 on Amazon. Understanding Reverse. It's a fantastic book, and it's a frequently asked questions book where he answers questions in super short, concise ways. He'll ask a question and answer it within 2 pages of the book. So it doesn't dig into all the little tiny minutia, but he has a great way of describing it. So keep that in mind. This one question though, what are the financial planning options with a reverse mortgage? And I got this from this book. I got to look at this in a little more detail, but I'll bet I could spend an entire show on just these questions. Okay. Or these options. First of all, let's talk about this because these are really good ways to look at it. You say, well, I don't need a reverse mortgage. I'm in good shape. You could benefit from a reverse mortgage most likely. Okay. First of all, look at it as a tax strategy. Avoid long-term capital gains. Under current tax guidelines, it may be possible to not have to pay federal income tax on capital gains if the taxpayer can stay in a lower tax bracket. One way to accomplish this is to strategically draw funds from a non-taxable source, like your home equity conversion mortgage, which is just the official name for the FHA-insured reverse mortgage program. Okay, you can take money from the reverse mortgage and not pay taxes on it, so you're not drawing as much from other taxable sources, and it may lower your income, taxable income, to where it puts you in a lower tax bracket, or maybe it might help lower your Medicare charges. It's all different kinds of things. Again, consult your tax advisor. Okay, I'm not a tax planner, but it might be able to cover the long-term care insurance, like we talked about in the previous one. It could cover the premiums if they got out of whack, or it might pay for long-term care itself. I just was talking with a lady this week, and I'm going to meet her next week. She needs like $6,000 a month just to cover people to come in for a few hours a day to help her out. They cook for her and clean and do things like this. They come in, I think, 8 or 10 hours a day. It could help you with property taxes and insurance. Remember, let's say you say, okay, well, I really am having a tough time, even if I don't have a mortgage, paying my taxes and insurance. Well, if we can give you enough money to where you can set aside money for taxes and insurance, that's another way to benefit from a reverse mortgage. Or it's possible, depending on how much money is available, we could even pay them for you. We use your loan proceeds to do it. It's called a life expectancy set aside. I've done that for older homeowners, like in your 80s, you've had a mortgage your whole life, and you don't want to worry about having to pay that tax payment every year, or your homeowner's insurance, because you may forget it. You're not used to paying it. Okay, so keep that in mind. Also, too, there's something called sequence of tax returns. This is where you take a loss early in retirement. Let's say you retired at 65 and then you took a 12, 15, 20% hit on your investments. Now you've got to start drawing from that, and you're drawing funds at a depleted amount, So you lost money, and when you draw from that, you're locking in those losses, and it could really, really shorten the longevity of your portfolio. With a reverse mortgage, you could take money from the reverse mortgage instead and let the market grow back. That's part of portfolio management, which is also another way. So in bull markets, what you do is you leave the money in your investments so it can grow, or you can even pay down your reverse mortgage some, so you're not being charged as much interest. But conversely, in bear markets, you can draw from the equity to take pressure off your retirement portfolios. And ultimately, you can draw less because distributions are tax-free. So you don't have to take as much money as you normally would from from your other investments. Relocate with liquidity. You're in a big house. You want to downsize. You say, okay, well, I'm just going to take money from the sale of this house and buy this other new home that's lower, easier to maintain or what have you, which is a great way to do it. But if you combine it with a reverse for purchase, you'll keep more money from the sale of your existing home or your old home. And so you can still get into the new home. You have a reverse mortgage on the new home, and you keep more money from the sale of your old home in your pocket or your investments. Fantastic option. More and more people should do that. That's part of my plan, that reverse for purchase. But retirement goals, this is good too, because a lot of pre-retirees are faced with a decision. Should I accelerate my payments on my forward mortgage to reduce my balance, or should I save for retirement, save the money for retirement? The reverse mortgage, by making payments on a reverse mortgage, this is what I was talking about before, you can actually do both. You get a reverse mortgage now while you're working, or let's say you're a real estate agent. Somebody you earn commissions and you're slowing down. You don't want to work as much, but you have a good month and you make $10,000. You can apply that money to your reverse mortgage, and you don't have to make monthly payments on a regular schedule. So you pay that $10,000, it pays down your loan, but the $10,000 gets moved over into your line of credit that you can draw from later. And that line of credit still grows. So you're helping it grow. You add that $10,000 there. As you keep that money growing over time, while you're working, you continue to contribute. And then when you stop working, you've got more money in savings from the line of credit. It is a fantastic option. I'm planning on doing that along with my reverse for purchase when I end up doing it. All right. So these 5 questions, they're not just a checklist. They're actually the beginning of a meaningful conversation about your future. And if you'd like help answering these questions, give me a call or visit my website. You can call me, remember, at 303-467-7821. Or visit my website at reversemortgageradio.net, 303-467-7821, or reversemortgageradio.net. My name is Bruce Simmons. I'd love to talk with you about your specific situation. I believe the best decisions are informed decisions. And my job, I swear, is not to push you into anything. It's to help you feel confident, safe, and supported in whatever path you choose, whichever way you decide. Okay, if you decide it's not for you now, that's great. You'll probably come back to me later, okay? Thank you so much for joining me on Reverse Mortgage Radio. Until next time, like I said, I'm Bruce Simmons. I help you turn your home into equity, into peace of mind.
Call Bruce Simmons today. Ask about his free Colorado Consumer Guide, 303-467-7821, or reversemortgageradio.net. Bruce will come to you anywhere across the Front Range to make sure you understand how reverse mortgages work. Regulated by DORA, NMLS number 409914. American Liberty Mortgage is an equal housing lender.